Markets, of course, are going to cheer this news. Let's take a look at the pre-open and what it's looking like, what it's indicating. Expect a gap up. We're already seeing tractor maker Escorts at a record high. We're seeing Hindustan Unilever at a 52-week high. The Nifty is up over 1%, as was expected. That GST cheer kicking in already in pre-open. Remember, we're also seeing global cues and a expected cut from the Fed, and that's also leading to positive sentiment when it comes to global cues. But really the focus today will be on the impact on domestic counters, on the kind of cheer we're seeing post these mega GST reforms. Pre-open there, Nifty Auto 3.5% higher. It's really seeing a fantastic shift coming in post some of those norms announced last night. Huge for the consumption segment, so keep an eye out on auto, keep an eye out on all your consumer durable stocks as well. HUL already at a 52-week high, Escorts already at a live high coming in. So lots of action there. Keep an eye out on food items, for instance, and across the board in the broader markets, we'll be seeing that impact play out. But look at some of those auto names, top of the charts. M&M up 7%, iShares up 5% in pre-open, and we're just about a few minutes away from market opening today. It's looking good, and that cheer also moving across the markets. Your consumer durable majors, HUL up over 3%, ITC following suit as well. And we will also start to see short covering coming in as we see a gap up in the markets. Let's see then post that if we start to see some profit booking as well. But clearly we're heading in for a good open this morning post that GST news. The GST Council has pulled off in one day what was expected to take two, rolling out the biggest tax reform since 2017, led by Finance Minister Nirmala Sitharaman. The Council has simplified India's GST structure to just two slabs, 5% and 18%, with a nil rate for essentials and 40% for sin and luxury goods. Insurance premiums, life-saving drugs, basic foods like roti, paneer, these are all now exempt.
This reform is not just on rationalizing rates. It's also on structural reforms. It's also on ease of living.
It was expected to take the GST Council 2 days, the 3rd and the 4th of September, to bring about the biggest reforms in the goods and services tax. But it took just 1 day for the apex GST body, headed by Finance Minister Nirmala Sitharaman and comprising the finance ministers of all states, to reach its decision on sweeping reforms. 8 years after the goods and services tax replaced a slew of central and state taxes, subsuming them into one nation, one tax, the GST Council made the structure less complicated by replacing 4 tax brackets with just 2. The previous slabs of 5, 12, 18 and 28% will be replaced by 2 slabs of 5 and 18%. There will be a NIP slab as well and a 40% slab for sin and luxury goods.
All this will be effective 22nd September 2025, which is the first day of Navaratri. The changes in GST rates of all goods except for pan masala, gutka, cigarettes, chewing tobacco, products like zarda, unmanufactured tobacco, BD, will be implemented with effect from 22nd September 25. Except for these,
insurance premiums, both for life and health policies, will now be exempt from GST. There is also total exemption of several life-saving, cancer drugs and medicines for rare diseases. Ultra-high temperature milk, chena and paneer and Indian breads like roti, chapati and paratha are also exempt. The 5% slab will include items for the middle class like hair oil, soaps, shampoos, cycles, kitchenware, household articles, food items, spectacles, man-made textiles and yarns, as well as items for agriculture used like pesticides, horticulture and agri-machines including tractors, and also on handicrafts, marble, granite, intermediate leather goods and renewable energy devices. The higher 18% slab will comprise air conditioners, all televisions, dishwashers, cars with engine capacity of under 1200 cc, two-wheelers with an engine capacity of under or equal to 350 cc, all auto parts, tractors, three-wheelers, buses, trucks and ambulances. As expected, sin and luxury goods including tobacco products, aerated drinks with added sugar, carbonated and caffeinated beverages, mid and large size cars, large engine two-wheelers and personal aircraft and yachts will attract 40% GST. IPL also moved to 40%.
A lot of industries have already come out and have committed that they will be transmitting this benefits too. Administratively, both at the state level as well as at the CBIC level, we will definitely be engaging with the industry and seeing to it that the benefits to the consumer as is planned as per the exercise is going to be transmitted to the consumers.
The government expects a net revenue to fall by around 48,000 crore rupees on consumption figures based in 2023 and 24. The centre, however, says the shortfall will be more than made up by the increase in economic activities.
We have estimated a figure. We expect that the net fiscal implication, we would not call it as a revenue loss because that doesn't seem to be the correct terminology. But net revenue implication of this proposal is expected, we have estimated it to be around 48,000 crores.
The GST rationalization comes at a time when the industry is facing global trade headwinds and fresh tariff hikes by the US have raised concerns about India's export prospects. Analysts expect the boost in domestic consumption to offset some of this impact. Bureau Report, Business Today Television.